The Genesis plans for
That would be boil.
bankruptcy. Oh, is it oversold in a month?
Oh yeah.
All right, let's jump into it. Today, futures, yes, it pumped up after that whole, what do you call this thing? Netflix thingy, it pumped up. Apple moved up. Apple was expected to bounce, and it did bounce. And futures pushed up and hitting a major resistance. We'll see in a minute where it is hitting this resistance, 39.30 to 39.33 area resistance, and coming back down. We'll see in a minute where it is, doing that. But for now, 8 below 21 is happened on the 3 minutes. However, this is not where the trade is. Neither here. This is the 15-minute chart, by the way. If it starts to push to the downside, you can expect it to come down into 39.13 area. But for now, this is not where the trade is. Neither it is here. Neither it is here, but it is holding this line, the 4-hour line. Fair enough. Right. So the trade is here. This mean reversion was pretty much guaranteed. Second standard deviation violation, return to the mean. Right, this is just the math how it plays out, and that's exactly the way it played out. And it's bouncing off of the mean, fair enough. And look at this thing, all the way down here, the RSI hitting the bottom of the range and starting to bounce. And that's just how things work throughout the history, and that's why we have this thing at the top here. And yesterday, as I was pointing out, Williams are very likely will bounce at the 50 level. It is holding at 50 level so far. Unless it breaches below the 50 level, not really looking forward for a push all the way down here. So fair enough. Now it hit that and bounced, and then obviously it cleared this number here, then hit this number, 21, and taking a breather from there. Now upside, where is the upside? Downside is defined. Downside is 39.07. If that breaches, then we'll look for a downside on SPX to hit its mean. Momentarily we'll go there to that. What is that? SPX. But for now, downside on ES is this 3906, 30, roughly, put a range on this 3900 to 3906. 3900 being a psychological level. Not everybody watches these charts. So, right about here, the mean is sitting, as of now, the mean is sitting 3907, 3906 to 3900. That's the downside on ES. So, what does that translate to us for SPX? Let's say 3900. Let's take out 20 points. So 3880 area for 3880. So and then 3907 on SPX would mean 3885, 3886 area for SPX. So that's the downside, right? If SPX breaches that 3880 area to the downside, then we reconsider the downside, probably all the way down here into this number. OPEX generally, if you're looking at the FinTwit, the Twitter and all that, people generally go off. That's hype, by the way. That's just hype. People say, OPEX this, OPEX that. It generally doesn't show up until the end of the day, and then some quick moves perhaps at the end of the day. But besides that, generally it doesn't show up. And basically, what happens at OPEX is options get expired and people want to make quick moves. That's basically it. Right. So that's the defined downside. 3900 to 3906 area on ES. That means 3880 to 3886 area on SPX to the downside. Now to the upside, if it clears this 39, and this is where exactly it is running into resistance, 3933, right? So this is where the trade is right now. So, and then why are we looking at the higher time frame? Simply because the tightness of the range makes sense to watch here. If it clears here 3930, 3935 area on SPX, that would translate to about 3920, 3910 to 3915 area on SPX. That clears, then we are looking for a push all the way up here into 3940, 3945 area for ES. That would translate to about 3920 to 3925 area on SPX. This line is a major resistance. And also now you have the 5 and 8 combined with the 200, the 50 moving average. This should act as pretty decent resistance. Now, what will clear this resistance? Obviously, we need to have Apple pushing up beyond 136.80, right? For this thing to clear up, Apple needs to push up beyond 136. We'll look at Apple in a minute, but that's the number, the 136.80 to 137. Apple needs to clear that. If Apple clears that, then you can expect SPX to clear up, and also we'll look at Microsoft in a minute, and probably look at a key level for both of those for the market to stay up to buoyant, or rather neutral. So this is where I think if it clears this 39, so tight range. Basically, what I'm trying to say is it's going to be a tight range unless it clears, this to the upside 39.33 on ES, then it's going to go hit this 39.40, 39.45 on ES. That would mean yesterday's highs will be tested for SPX again, 39.20 to 39.25. That clears, very likely it's going to go up into 39.68, not the base case again. If that clears, the 200 moving average should again act as pretty decent resistance here, 39.75. That's the upside, and this is not the base case. This is just, I'm just throwing out a number there, right? So that would again mean about 1.5%. If if something, if something comes through as a debt ceiling limit, some what do you call that, something, some agreement, is made in Congress, something like that, or some good news comes out of Apple, or something like that happens, then very likely you'll see this get tested, 37, 39.75, 39.70 area, although not a base case today. 50 points to the upside is not a base case today. If it does, good enough, and we'll reassess that to move to the upside after this 50 moving average is cleared, right? And to the downside, if it breaches here 39.21, that means about 3900 area, 38.97, 38.94 area on SPX. Then it's going to come back down into the mean 3907 to 3900, 3880 to 3886 on SPX. So that breaches, we can expect it to push down, but if that breaches, then we'll reassess the situation. As of now, this is the game plan. Right. Now it makes sense to keep an eye on this chart. Why? Because if it breaches this mean, a very tendency for it to go back down into this mean about here, 3878 area, 3878, 3875 area on ES. And that would mean about 3850 area on 3850, 3855 on SPX, right? That's the basic idea here. Really not really plotting beyond uh, anything beyond or below the weekly mean as of now. As of now, in fact, I'm not really plotting anything below daily mean as of now. But if it breaches there, we'll reassess the situation and probably come back down into the weekly mean. This is healthy. This is healthy for the markets, and it's nothing crazy. Even if it comes back down into the weekly mean, that is still nothing crazy. That is still again within 1.1 and 1.5% on the day, right? That's the normal move for SPX. Good enough. Now that's all good. And if it breaches there, I don't believe it's going to breach there. But if it does breach there, it's going to come back down into this 3820. Probably that means 3800 on SPX. And then that's not that is again not a base case as of now. But if it does breach this mean on the week, then we'll reassess the situation, right? Okay, now let's get into SP. And yesterday's charting, we had all these points, and yet again somehow I think people, I don't know if nobody took the notes or nobody followed the charting, but people made the same mistakes again. SPX downside, right about here, and 3860 is not my base case as of now, but if it does breach below right about here, this is SPX daily. So yesterday, expectation was for it to come back down and hit this mean and then bounce 3880, 3881. Did not happen. Today, hopefully, it gets pushed down here, and hopefully we get another bounce spot. Looking at RSI, bounce makes sense. I was expecting the RSI hitting the bottom and hitting and the price action hitting a major moving average like the mean on the daily, and then bouncing off of that. That was the expectation there, but did not happen. The ES hit the mean and it bounced off of that. Fair enough. Either way, it's fine. So now the mean is about, and then the mean will adjust itself if based on the data, and to the downside, mean will get tested again, very likely, and we get another bounce. But if the mean breaches, then very likely it's going to come down into the 100 moving average. And as and when the mean breaches, we'll reassess the situation down here into the 100, and then probably we go here, and then right about here we'll reassess the situation into this number. If it breaches, then we'll again look at Apple and see where Apple is headed. Right. And to the upside, 5 and 8 on the week, 38. This is where I think the market will open around 39. Where is it? Around 3,900, right about here, just below the 8 on the around 3,900, 3,902 area. That's where the market will open. And for market to move meaningfully higher, it needs to clear this 3920, 3925 area. That would again translate to ES clearing that 50 moving average to the upside, right? So that's the whole idea. And now let's get into Apple. This is the thing that will put us, probably if it needs to move higher, this is the thing that should help us out. Now, here the thing, we've been following this chart. The 5 was easier, 8 was easier trade. This trade was easier till here, right? And after this, now the upside is again this line right here. It was a bit higher yesterday. Now it's a bit lower here. But Apple needs to move over this line for any meaningful upside, or for the markets to stay buoyant today or neutral. Apple needs to be sustainably above the 8 on the week, right? 136.25, 136.30, whatever this line is. Apple needs to sustainably over this line. And if Apple closes above today, if Apple closes above 8, this is what we want to see. But close above 8, that means it is setting up for a bounce, probably into this number, about 139. But for now, we want to see this clear to the upside. Then we'll look for further upside. And if it spikes up all the way till here and comes back down, that is still not good enough for me. For me, Apple needs to close above this 8 on the week for it to sustainably move higher next week, right? So that's the idea here. That's the bigger picture here. To the downside, if it comes back down, I think it should hold this 5, or at least if the 5 breaches about 134.50, 134.40 area, that breaches very likely the one standard deviation, give or take 134.30, 134 area. In general, that has to hold to the downside. Let's get here. Um, right here, the idea was yesterday. This idea was that it's away from its 5, hitting a major moving average. We knew it will come back into 5 and 8. It bounced at 8. Right, this is where we caught that bounce, and as it was hitting this 8 and it was bouncing, SPX moved up all the way into what 3923 area and faded away from there. So that's the same idea again. Apple will come back into, so let's say not Apple will, but let's say Apple comes back into the 5 here. I'll look for one bounce, right? 134.60, 134.50 area. I'll look for that bounce. That breaches again the same thing, 133.60, 133.50 area, again another bounce. But if Apple breaches below here, then that means SPX will be again starting to push down into a sustainably downside. Probably will test our, if it breaches below the 8, it'll SPX will probably start to move into that 3880 and sub 3880, probably into 3860, 3850. So by the time that happens, if Apple starts to breach below the 8 on the day, then very likely Apple will, and we don't want to see Apple close below this 8 on the day, right? That would start to push, that would start to put downward pressure on Apple for it to come back into its mean. So far, it's holding off that, but the mean reversion, because it has breached the second standard deviation, mean reversion makes sense, and that's how we are planning it as of now. Right here, the RSI is suggesting the same story that probably it's going to breach the 8 here. right about here. And if you're looking at these technicals, you need to follow these candles. So probably 133.40, 133.50 area, uh, the 133.40, 133.45 area. We want to see that get tested. And if Apple breaches below, there is no way that you would see SPX move higher, right? There's just no way about. There's just no way that's going to happen. So we want to see Apple sustainably higher above the weekly eight for the markets to either move up or stay positive at least. And if Apple starts to breach below the 8 and the 21 on the day, that means there is some more downside. Probably the next bounce spot is the inner Bollinger Band, about 132.30. And if that breaches, the mean reversion is at about 131, give or take 131 area, 131.13 or 131 area, right? That's the bigger picture. Right. Let's get a bit into Microsoft. This holds some value. Uh, the downside is a bigger picture. The downside is still 224. Obviously, not for today, and it's not going to happen today. So very likely, if Microsoft comes down into 230, fair enough. 230 area is good enough, I think. If that breaches, we'll reassess Microsoft perhaps into another couple of points to the downside. But 230, 233, 230 area is fair enough. And to the upside, very likely 235.70 to 236 area, right? So that's how I'm looking at Microsoft. Microsoft again will be range bound, and unless Microsoft clears this range, I don't believe it's going to clear this range. But if it does, then we are looking for some sustained upside. Let's get into Microsoft here. Right. So this is exactly what the fear is with Apple right now, right? This is exactly what the fear is with Apple. Right now, here you see this line here, second standard deviation, and came back down 5.8, and once it broke below 8, then it moved down. Very likely it's going to come back into the second standard, at least the first standard deviation here at 229, 60 to 30, 60, within that range, 230.30 to 229.60, within that range to the downside if Microsoft starts to come down. If this happens with Apple, where it breaches, we just let me open up another one. And if possible, take some notes or write it down somewhere. Or if you're good enough with your memory, that's good too. Right. So this is exactly the story that we are facing with Apple. Apple 8 on the daily. If it breaches below there, then very likely it's going to come down into 132 area. That breaches, the mean reversion will happen about 131 area. So that's the same thing that happened with Microsoft, starting to come back down, 5.8 mean breach to the downside, right? So we don't want to see this happen with Apple. If it happens with Apple, there's nothing that we can do about it, and just probably get into puts, 2 weeks out puts. Now the idea here with Microsoft, we want to see this come down. Actually, we want to see this come down, either through the means of Apple selling to the downside, or OPEX coming in and pushing Microsoft to the downside. Either somehow we want to see this come down, either into the one standard deviation on the week, which is about 230 to 30 area, or right about here, 229.60 to 29.50 area. We want to see Microsoft come down. Why? Because then you're seeing this thing. It's almost at the bottom, right? So RSI is almost at the bottom. Then it will hit a major movement, major support area, technical support area. Then we can expect a bounce. Probably it will come back into this one standard or it will come back into inner Bollinger Band here, 382.382. So if that happens, then very likely we can see some bounce off of SPX as well. So waiting for that. And to the upside, if Microsoft starts to bounce here and if it clears this 233.30 area, very likely again it's going to push all the way up into 235.14, 235. If that clears, very likely I'm expecting it to hit this 236.70. Not the base case, but we'll keep an eye on this number 235. And this number here, 236.70, 236.50, not a base case. But if it clears here, the 5 and 8 on the day, then we're looking forward for further upside. And if Microsoft clears this 235.50 area, then very likely chance that will make new highs on SPX as well. And there are right chances for that because RSI is trying to bottom out here. Right. So, and let's also get into Tesla here a bit. Tesla here, we are still watching the weekly chart, and this chart looks really, really, really gorgeous to me. And again, the idea here for Tesla is to come back up and test this five on the week, and if it clears, and hoping, I am really hoping that it will close above this number today, 130 50 around wherever this will be, the five. Uh, if it closes above there, then likelihood of it jumping in the next week probably is pretty decent. And now that actually Netflix has reported better than expected user growth, so that should come through for all the tech. And with Bitcoin moving up, so you can expect Tesla to kind of jump if it closes above the above the 5 year, expecting it to jump around 138. Then the next stop is here, 141, 142. This is pretty doable. This is pretty doable for Tesla. And look at RSI; it's trying to cross over. And if the MACD crosses over here on the week, that's much better. That will start to create pretty decent trend here. And if the numbers come in better than expected, then I'm expecting short covering to happen. And if short covering happens, this is where it's expected to go, or at least right about here. Open this chart up. Very likely it's going to go hit this number, 159. Uh, and probably it will run up to this number, 138, 139 area. Uh, Rather, at least you can put it here. At least you can put a number here around 133. My expectation for Tesla to run up into this number. And if it closes above this number, I'm expecting it to hit this 142 number uh, right here. Right. So this is the line that I'm trying to extend here. Cool. Right. Let's go Tesla a bit here too. Right about till here. This is the expectation from Tesla, and to the upside here, the 21, it needs to clear this 130 resistance. Yesterday again the same thing played out. We want to see this clear 130 resistance, and then we'll start to see 132, 135, eventually push up all the way till 138. Probably not a story for today. And to the downside, similar range, 5, and then 5 breaches the 8, 8 breaches then the mean, right? That's the similar story. If it starts to come back down, especially if it breaches below 8, then we are likely to see Tesla around 122 area. Cool thing. And let's also, we want to see a bit of Amazon here. Amazon, this move, everybody understand this move. It moved up, overbought conditions. It's starting to come back down, hit the 5, hit the 8, and bounced. Now again, the idea for Amazon is to again come back down, test this number if the market starts to soften, especially if Apple starts to push below. And I'm expecting Amazon to come back down, hit this number. If it breaches there, very likely it's going to come back down into right about here, 9160 area, then very likely 9120 area, then very likely 9080 area. However, even if Amazon starts to come back down, I'll still be looking for a push higher. The mean, either I can take right here this bounce again, or I can take this bounce, or I can take this bounce, or I can take this bounce. Doesn't matter. So what does that mean? Why do I keep saying doesn't matter? So if it starts to come back down, the idea for me is to sell puts, or instead of because it will keep bouncing either here, or it will keep bouncing. So idea for me is to either sell the puts at the mean, or down here, and willing to take a position. That's the idea here. Why am I looking at it that way? Look at this chart, right? It is getting oversold, and the idea for it is to probably come back down here around 88 again and bounce again all the way up to 98. And I'm also looking at this chart, the weekly chart. uh, right about here we are looking, probably a good bounce spot is about 9160 area, and probably a push all the way up into 10150 area, 10130, 10150. That's the mean. I don't believe that, just because of some softness that mean reversion doesn't happen. Heikanashi is still pointing up. The average is still there. We are still following this crossover on the SMI, and we are about to get, or rather, we got a crossover on the MACD here, right? So there are pretty decent chances for for this thing to bounce and push all the way up here into 190 to 101 area. That's the area. That's the reason I'm looking for that bounce. Right. Cool thing. Yeah. Let's get into US 10. US 10 to the downside, we are still expecting it to come back down into 3.23 area. And to the upside, probably 3.55. That clears. Very likely it's going to go up into 3.74. Uh, Likelihood of 3.74 happening will increase if it clears 3.58 to 3.60, right about here. Basically, the 5 and 8 on the week. Until that happens, I'm okay with, probably it'll start to keep chopping and here and there. I'm okay with that. And DXY is a different story here. DXY is building up momentum for a bounce, right? It's been flat all here. The RSI is flat. So, how big of a bounce? Probably right about here. It makes sense for it to come back up, and OPEX might actually push it up. Probably 103.27 is 5 on the week. I'm not I don't want it to go all the way up there, but we'll keep a watch on that because that is logical for it to come back up into 103.20. And if DXY takes this path to the upside, obviously it will dent some of the risk assets to the downside. Look at this chart. This chart, yeah. Oh, I was watching this chart in the morning. So morning, it was hitting the 5 and starting to take a breather. Now it has cleared the 5 and hit its 8 and took a breather right about here. So now again, the idea here is if it starts to come back up, hits the 8 again, then very, very, very likely it's going to breach the 8. Why? Because it has built enough momentum for it to breach that 8, and very likely it's going to go hit this number 103.20. Right? That's the idea here. And should DXY take this path to the upside, especially if DXY breaches the 8 on the day, then very likely you'll see some more downside to the markets. That's logical. Right. And this even so, why do I keep saying that word logical? Because that's how it functions. However, if the earnings are in focus, especially with Apple, Amazon, and Microsoft, if that trade moves up, then no point looking at this DXY chart. We can simply go by what Amazon and Apple and Microsoft are doing. If Apple and Amazon, Microsoft are moving to the upside based on what Netflix has reported, then very likely we'll see push all the way up into 38, 39.20 to 39.40 area. Cool thing. Anything else in particular we're watching? VIX, not really. But yeah, Netflix is another trade, and the number that I was putting out for Netflix, we got 2 minutes, right? Okay. Number is right about here. Uh, Not this number, right about here, 39.51. Uh, yeah, this was 39.51 right here. So yesterday I was looking at this. If it clears, it has this is the monthly chart, and we still got a crossover here. MACD is about to cross to the upside on the month. So if it starts to push to the upside, this is where I was getting my. It's a bit down today, but 38, 30, 350, right? 350 is this is where I was getting my 350 from for Netflix. It's the implied move is about 9%. About 10%, 9.9%. So it hasn't happened. So if it moves another, let's say 10 points to 15 points, very likely it's going to go hit this number, about 350. If that clears, very likely 33, 360. And if it clears this 365 area, then the mean reversion is about to happen at 391. This is where I was getting my 390 from. Yesterday I put out in the chat. This is where I'm getting that from. Right. 1 minute to open. Let's get into live trading.